everyone, and thank you for joining us today for Single Audit Basics and how to prepare. The next hour, we're going to talk to you about some of the basic things that you need to know in the single audit world, especially if you've never had a single audit or it's been a long time since your auditors have done a single audit for you. By way of quick introduction, my name is Angie Hillisted, and I'm a partner in Eide Bailey's National Assurance Office, and I'm located physically in Sioux Falls, South Dakota. I spend most of my time working on not-for-profit clients, so my single audit experience is based in the not-for-profit space. I'm joined today by our lead facilitators, Alicia Herrera, who's a manager in our Rancho Cucamonga, California office. Alicia's experience is primarily on the government side, with a little spattering of not-for-profit in her wheelhouse. And she is joined by Kurt Schlicker, who's a senior manager in our Reno, Nevada office. And Kurt's experience too is very heavily focused on the government side of the world, but he also has some not-for-profit clients. So got the whole span of single audits here ready to talk about for you. Today's agenda, we're gonna talk a little bit about an overview of the regulations and kind of what we are talking about when we say single audit, what we mean, what this means for you. We want to walk through how you prepare for a single audit, especially, as I mentioned, if you're new to this space, there's a lot to do that you might not realize you have to do. We'll talk about how to prepare the schedule of expenditures of federal awards. We'll talk about program rotation and how that might impact you, grant agreements, and the compliance supplement. We'll walk through some internal control policies and procedures, and we'll talk about record retention and reconciliations. And then finally, we're going to end today's session by focusing on some topics that are specific to COVID-19 and related programs that you might have as a part of the CARES Act. And with that, I'm going to go ahead and turn it over to Alicia to get us started.
Thanks, Angie, and good morning or good afternoon to you, depending on where you're at. Let's get started. The first thing we're going to talk about is what are these federal requirements and guidelines we should be following, and where do we find them? So the guidelines, the overall guidelines for federal financial assistance are codified in the Code of Federal Regulations. So you often hear us reference 2 CFR Part 200. It's commonly known as the Uniform Guidance. And these are the general requirements for applying, maintaining, and reporting your federal financial assistance, as well as the guidance that we use as auditors when we come in to do the single audit. And unlike a lot of other laws that I have to do research on, the Uniform Guidance is pretty well organized and relatively easy to read, so I frequently reference the actual laws themselves when I'm performing my audit or answering questions for clients. We're going to go over the last 3 subparts, D, E, and F, in more detail in the next slides. The first 3, they're general information and also some requirements when you're applying for the federal awards, but subpart A can be very helpful if you are not really familiar with federal terminology. There's a great list of acronyms and common definitions that you'll see throughout the Uniform Guidance and in your grant award documentation as well. So let's get into more detail about subpart D, probably one of the most important areas for the auditees. Hit next slide, perfect, thank you. And subpart D contains the requirements during the federal award period themselves. So again, these are general requirements applicable to all or almost all types of federal assistance. These don't contain specific requirements for each individual federal program. We're going to talk about where you would find those in a couple slides. But these general requirements that are in place, it's kind of like the foundation of the compliance for these federal awards. Things that are going to be contained in here are what financial and program management practices that must be in place in your organization to maintain these federal awards, including developing and maintaining internal controls, which we'll talk about in much more detail a little later on. You'll find requirements over property and equipment purchases made with federal funds, over reporting that you have to do. Almost every program has some sort of reporting requirement that's attached to your federal award. So the generic requirements for that are going to be contained in this section of the Uniform Guidance. We've bolded a couple areas, first one being procurement. And what we mean by procurement, this is the purchasing and contracting with vendors related to your federal funds. It can be a complex area of federal guidance. We do sometimes find non-compliance in this area because it is a little complex. And Kurt is going to talk about this in a little more detail later on. Another area we bolded is another area where we do find quite a bit of non-compliance. It's subrecipient monitoring. And this is really only applicable to you if you are passing through your federal money to a lower tier entity. So let me give you an example. Let's say you get some federal award, either directly from the feds or from a state government, and you give some or all that money to a lower tier entity for them to run the program themselves. That entity would be considered your subrecipient, and you are responsible for monitoring them and how they're administering the award. Again, an area where we find a lot of non-compliance because it is very complex. So if you have subrecipients or you're not sure if you have subrecipients, definitely reach out to your auditor or ideally professional to help kind of guide you through that process and make sure you know what you need to stay in compliance. And then the last couple areas, remedies for non-compliance, collection of amount due. Those are really only applicable if you have findings or there's non-compliance that there's some sort of question costs. So no need to worry about those unless you come into a situation where you're having non-compliance findings. Next one, subpart E. These are the cost principles, and what that means is it's the general and basic guidelines for costs that are charged to your federal programs. And there are quite a few of these guidelines, the big ones being that costs that you're incurring are reasonable and necessary for the operation of the program. So without purchasing a certain item, you couldn't operate the program. These costs must be consistent with your organization's policies and procedures. It must be accounted for in accordance with GAAP and must be adequately documented. That one's really key because you got to be able to prove that compliance and also provide us with the audit trail we need to be able to determine that you're in compliance with the federal program. There's distinctions between direct and indirect costs. Indirect costs can be a little tricky. Oftentimes they're very specific to your entity or even to an individual program level. So if you ever have questions or you're not sure about the indirect costs that are allowed for a particular program, definitely check with your auditor, ideally professional, to make sure you're really understanding what's applicable to you in that situation. There's some special considerations for states, local governments, Indian tribe, and also for institutions of higher education. But the last part of subpart E is really a super helpful area. It's a really long listing of different types of costs and what information is there about their allowability or any other requirements. So let me give you a couple examples. Big one being personnel costs. So a large portion of federal monies go to salaries and benefits of the individuals that run those programs. And so if you were to check the personnel costs in subpart E, it would let you know what controls and documentation must be in place to justify those salaries and benefits. You'll also find here information about travel, conference, entertainment costs, in what instances are those costs permitted, when and how you can charge interest and depreciation to federal grants. There's also a couple items that are explicitly unallowed. So one that we do find sometimes is alcoholic beverages. So you'll find in this section, alcoholic beverages explicitly unallowed for all federal funding. So if you ever come across a specific item that you're questioning or maybe not sure if it's allowable, this is a great place to look first to see if there's any guidance on that. And then the last part, subpart F, it's our favorite part because it relates to the audit. This lines up what are the responsibilities for both the auditee to go out and get an audit and report those results, and also for us, the auditors, to perform the single audit. So that's a brief overview of the uniform guidance, where you can find it. And again, those are generic requirements over federal awards. To really understand the specific requirements in place for your particular grants, there's a couple other places you're going to want to look. And contrary to popular belief and also some of my client complaints, the requirements aren't meant to be hidden from you. You just need to know where to look for them. And so the first thing you're going to want to do is read your grant agreement very closely, and you want to look out for special terms and conditions and requirements that are lined out in there. So things such as specific things that you can spend your grant money on, if you have some sort of program budget from your granting agency, what types of reports and how often you're supposed to submit those reports. Those are all things that are likely going to be outlined in your grant agreement. So you want to have that handy, available for reference. And if there's anything that you're reading that you're just not sure of, or it's not clear to you, you're going to want to double check that with the granting agency and make sure everybody's on the same page with what the requirements are. And then the second area we would recommend that you look for specific program requirements is a document that's called the Compliance Supplement. The Compliance Supplement is issued every year by the Office of Management and Budget. Typically comes out sometime in the summer, so there is a new one every year. We're still waiting on the 2020 version, but it's expected to come out soon. And even though this is a document that's really designed for us, the auditors, we often recommend that our clients read it because it does give you some background information on the program and also what the suggested audit procedures are. So what the federal government wants us to look at in relation to those programs. So it could be a really helpful tool. Again, it's pretty easy to read and navigate, so it's a great place to look. One caveat this year with the Compliance Supplement is with any funds related to COVID-19 that are a brand new program, so they're not associated with an existing program from before. Any of that information is not expected to be released until September 2020. So if you have questions about your auditors about what types of things they're going to look at with these new COVID funds, we can give you our best estimate on the guidance, but we really won't have those specific information in the Compliance Supplement until September 2020. And so with that, I will turn it over to Kurt to talk a little bit more about what the Sefa is.
Yeah, thank you so much, Alicia, on that for that overview of uniform guidance and kind of to provide an outline of where you should start looking if you're questioning what the heck uniform guidance even is. Now, diving a little deeper into that, you'll hear auditors and as part of lingo say all the time Sefa. And we say Sefa like it's, you know, part of the English language and part of normal vocabulary. But what we really mean by the Sefa is that stands for the Schedule of Expenditures of Federal Awards. And what this schedule is, it's really a listing of federal monies, and they can come in a lot of different forms, and we're going to talk about those different types of forms of federal assistance in a couple of slides. But really, it's a listing of federal monies or federal financial assistance, and auditors use that to kind of gauge whether or not an audit is required. So for those of you that don't know, once the Sefa is prepared, if the total federal expenditures at the bottom of that Sefa exceeds $750,000, that is when a single audit is required. And so when you're thinking in this year's context, especially with the CARES Act dollars and the coronavirus relief funding and all the different funding sources coming out from a federal level, theoretically, if you're receiving these grant programs and they exceed $750,000 in the aggregate, not individually, but in the aggregate above $750,000, an audit will be required. So what's kind of important and what goes into the Sefa? The first step is obviously reconciling it to your underlying accounting records. That's going to be one of our first steps of the audit. We're going to look to make sure that you have internal controls in place, that you can adequately track those records, and that we can place some assurance on your numbers, because we're going to talk about program rotation as well later in the slide. That's how we decide what programs are subject to audit. We don't end up auditing the whole Sefa. We audit portions of them, but the expenditure amounts for each of them is very important. One question I get from clients all the time is, why is what recorded on the Sefa different than what's recorded in GAAP and in our accounting records? Because it's not just expenses like you would normally record expenses under GAAP. And the reason for that is all federal financial assistance generally, can be in other forms other than just a normal invoice expense reimbursement type situation. You could be purchasing real property that in your books and records you capitalize as equipment or as a building, etc. But so it's not expense, but that still gets recorded on your Sefa. There's also loan programs. If you take out a loan from the federal government, that's treated differently and has different characteristics than, again, a normal expense gap reporting type situation. And don't worry, we are going to go over the different basis of accounting and how you record some of these items on your Sefa. But again, that's kind of why, to provide some background, the Sefa is different than GAAP. The last, or not the last, but another key thing to remember is that this is the schedule of expenditures, not the schedule of revenues. I have a lot of clients that record federal grant revenue, and whatever that revenue amount is what they report on the Sefa. And unfortunately, that can lead to some exceptions and some findings or errors being made simply because there's different timing in the expense recognition, or there's deferred revenues, especially in a government setting. Maybe you didn't receipt those grants early enough and there's a delay in receiving them, but the expenses have already occurred. If you have loan programs, and we're going to get into some non-cash items. So things work a little bit differently, but please keep in mind that it's a schedule of expenditures and not a schedule of revenues. So I just mentioned all these differences between GAAP and the Sefa, and what does that mean? So I've included this slide and the next slide on non-cash assistance here to help kind of provide some background on and to put it in perspective of why there's differences. So as you can see on the left side of the chart, there are a lot of different examples of federal financial assistance. There's grants and cost reimbursement contracts, cooperative agreements. You can have loan programs, donation of federal property, commodities, etc. And some of you may be thinking, well, what are these things? What do they apply? And I'm not going to go through and give you a definition on all of these because that's sort of outside our scope a little bit today, but there are a couple of examples. So a grant, that would be your normal kind of, the federal government is granting money downward to use to benefit the public good. There's no income or loss in that calculation. It's really a granting of monies. There can be loan programs, common for the U.S. Department of Agriculture to issue loan programs to help rural communities with, critical care or hospitals where, they may not have the funding to build a new wing for a critical care hospital or something like that out in a rural community. And the USDA will loan money out typically over like 50 years, a very long loan with a low interest rate to help provide access. And there's rules for accounting and on those loans and how to report them on the Sefa. Donated property. That's when the federal government has surplus property, very common in Department of Justice, where they have surplus military equipment that they donate down to local sheriff's offices. So again, all these different types of assistance, but you can see on the right that each of these kind of have their own basis of when you recognize an expenditure on the Sefa. So for grants and those kind of style of awards, that's when the underlying expenditure or the expense transaction occurs. Think accrual accounting and GAAP accounting just like you normally would. So that's kind of the basic process. Now, a key here is pass-through amounts to subrecipients. That is when disbursement is made. So more on a cash basis. Very common difference between Sefa and GAAP financial reporting are payments to subrecipients. Payments to subrecipients are recorded on the Sefa, again, when disbursement is made, not necessarily relaying to the underlying expense at the subrecipient level. It's the pass-through date at the pass-through entity level. Loan and loan guarantees, those are when the proceeds are used. The next slide, I'll talk about some more stuff on loans that are unique. But again, I'm not going to go through all of this. I promise that would probably bore all of you, but here's just a reference slide. If you have any of these that affect your organization, to use as a starting point. And of course, if you have questions, obviously discuss these with your auditor or your Eide Bailey professional to make sure you're reporting the Sefa accurately. So there are non-cash awards and non-cash federal assistance as well. And these each have their own rules. The common ones you will really see are commodities and loans. So there are loans at, the student financial aid and at higher ed And then there's the USDA loans, like I just said. And loans have something weird on them that for most entities, and I'll say governments usually receive the USDA loans, but for most of them, there's still a liability back to the federal government. The federal government's still at risk for this loan balance. And so because of that reason, the feds have decided that you need to record the value of that loan balance on your Sefa. And so it starts with the value of the loan at the beginning of the balance, plus any new loans that you received during the year. And that's as long as there are continuing compliance requirements on that loan. You know, they can be compensating balances or deferred maintenance contracts or balances that have to be maintained, some sort of continuing reporting requirement. As long as there are still compliance considerations over that loan balance and it's still outstanding, meaning at risk of back to the feds, then that is recorded on the Sefa. So again, not going to go over this in too much more detail, but just to be aware that there's cash assistance and non-cash assistance, and uniform guidance outlines the basis of reporting for all of these. So then when we talk about the Sefa itself, there are requirements in preparing the Sefa and what the Sefa has to look like. So expenditures need to be grouped by CFDA number. So many of you who've never had a single audit and may not know what we're talking about, a CFDA number stands for the Catalog of Federal Domestic Assistance. These are unique identifiers that each federal agency applies to their federal programs. And they're outlined. So the first two, there'll be a 5-digit number, and the first one will identify the first two will identify the federal agency, and then the next three will identify the program at that federal agency. And so when you prepare a Sefa, and I have an example on the very next slide of what this looks like, you will have your programs organized and grouped by CFDA. If you received the awards from a pass-through entity, so for many of you that would be receiving awards from a state entity, the state received it from the feds and then the state passed it down to you, the state would have identified a pass-through number or a grant award number on that agreement that they entered into with you, and you would identify that on the face of the Sefa. It is optional to list if you receive direct awards from the feds to report the federal award number as well. I have many clients that choose to report both the pass-through award number and the federal award number on direct programs, just so it looks like their Sefa doesn't have any blank space in it or a bunch of not applicables, and they just like the presentation better. But the only requirement is that pass-through entity identifying numbers are included. New with uniform guidance is a requirement that amounts provided to subrecipients for each federal program be included. This is really a disclosure purpose. So if you received $1 million and you pass through 800,000, the feds have thought that that's a useful disclosure basically on the face of the Sefa to show how much of those dollars you're keeping internally and spending through running the program internally versus how many you're giving to other organizations to administer. You have to provide the totals for each of the clusters of programs. Now, a cluster are a group of programs where the feds have said these all have basically the same requirements. They're run very consistently through the same agency. An example of clusters are the Student Financial Aid Cluster or the Child Nutrition Cluster. If you think of child nutrition, they have a school breakfast program and a school lunch program. And if you just think conceptually, it makes a lot of sense for those programs to kind of run together. And so the reporting requirements and the administration of those programs are very similar and like, and so they're grouped as a cluster. The feds tell you the auditee, and tell us the auditors what the clusters are, and that's how they're reported on the Sefa. Again, if applicable, you have to put loan balances on the Sefa, loan guarantee programs. You also have to put non-cash assistance. So if you're at a county that has a sheriff's office that participates in federal surplus and they have surplus property coming from the military, the value of those donated goods are also reported on the Sefa. Many of you will have grants that maybe have a different grant year end than your fiscal year. So they might be on the federal fiscal year end with a 9/30 end date versus a June 30th or 12/31. So normally what that ends up causing are multiple grants under the same program to be issued if it's a recurring grant program. And so most entities and most clients will break those up and show each grant award by CFDA on the face of the Sefa. One special caveat here on state grants and state awards. Now, don't be confused with federal awards that the state is passing through. That is a federal award, even though the state's passing it through. What I mean by the state grants are local state tax revenues that the state collects themselves that they're awarding as part of, state statute or state distribution. There is a requirement that in certain states, they do want some of these state awards to be presented on the Sefa. And so that is simply a disclosure that, here's a $5 million Sefa, and of this, there are some state awards that are also included. So here's an illustrative example of what a generic Sefa might look like. You can see on the left, you have basically the identification of the programs. One thing I didn't mention on the previous slide is you do have to list the federal agency, and you'll total it by federal agency. So this example is very simple, but if you had multiple programs under the Small Business Administration or under HUD, you would be listing more programs, and then you would have a total HUD or a total Small Business Administration line as well. But you can see there's federal CFDA numbers there, the pass-through identifying number with your federal expenditures, and then the amounts passed through to subrecipients. Now, key thing on the amounts passed through to subrecipients is that total federal expenditure line item is the total amount, and the expenditures to subrecipients are of that amount. So in this example, the total awards is $585,000. You don't back out $50,000 and report that separately. So they did not get a $635,000 award. They received $585,000, and of that $585,000, they passed through $50,000 to subrecipients. So this again is what an illustrative Sefa would look like. Along with preparation of the Sefa and what that looks like, just like in the financial audit where you have your financial statements and then notes to the financial statements, you also have notes required to the Sefa. The required elements in the notes to the Sefa are a summary of significant accounting policies. Now this isn't like the very long note 1 to your financial statements where you have, your disclosures on property and cash and, business combinations if you have that, and all of those financial disclosures. These are on summary of significant accounting policies as they relate to preparation of the Sefa, how the expenditures are recorded, your basis for accounting for those, etc. If you have amounts that are not easily reconcilable back to your financial statements for whatever reason, and there's a lot of reasons for that, it's an AICPA recommendation to include a reconciliation from your financial statements to the Sefa to allow for better clarity to readers, to the users of the financial statements. This isn't actually a requirement in uniform guidance, but it is a recommendation by the AICPA. So if you're a government, and I'll use the government example, if you have expenditures in multiple different funds, maybe in the general fund and some special revenue funds, maybe a capital projects fund, whatever it is, then you could show the expenditures by fund and then how that ties back to the Sefa. If it's not clear in your not-for-profit statements and you can't tell what the expenditures are in your functional expenses, might be an easier, to put a reconciliation in there to show that. The The third requirement here is disclosing whether or not the organization is elected to use a 10% de minimis indirect rate. And that sounds complicated or overwhelming, or what is the 10% de minimis indirect rate? The de minimis indirect rate, the feds have realized that there are indirect costs associated with running federal programs. Now, entities can negotiate their own indirect cost rate plans with their grantor, or sometimes that indirect cost rate is mandated by law or in a grant award and some other factor. But if an entity has never negotiated an indirect cost rate plan, never created one themselves, or the indirect cost rates aren't mandated, then an organization can choose to elect a 10% de minimis rate so that they don't have to go through all this crazy paperwork, and they can just say, we're going to apply 10% indirect costs to all our programs. And really what ends up happening is you take a calculation of your direct costs and you get 10% of that added on top, assuming there's budget in the grant to be able to provide for that. Year-end loan balances. So just how I spoke on the Sefa about beginning loan balances plus new loan balances received during the year, the feds are still concerned about loans, and they want a required disclosure on the year-end balance of that loan as well. So the Sefa gets the beginning balance, and then the notes get the ending balance. So with that, that's kind of the overview of the Sefa, the Schedule of Expenditures of Federal Awards. If you've never prepared one before, this can be very overwhelming and confusing. Please reach out. We have illustrative examples. We can talk about the basis of accounting, and then you can start preparing your reconciliations so that hopefully when us, the auditors, are showing up in the next couple of months, we can easily reconcile that to your underlying accounting records, agree with you guys, and then move on, and also give clarity of whether an audit's required or not. So with that, I'm going to turn it back over to Alicia to discuss program rotation.
Thank you. And before I move on to program rotation, I do quickly want to mention the Uniform Guidance and Compliance Supplement that I spoke about earlier. We've included links to that information in the resource slides towards the end of the presentation. So that's there for you. You can reference that as needed. So program rotation, now that Kurt has gone over how to report your federal programs on the Sefa, that leads into how we start deciding which programs that we need to audit during the year. And we use this thing called program rotation as part of that decision. Now, there's some misconceptions out there that you really need to be in compliance with your largest grant programs or the grants that you think that we're going to audit in the given year based on the program rotation. And of course, that's just not the case. The Uniform Guidance is applicable to all of your federal financial assistance down to your smallest programs. So it's really important that you're implementing best practices to ensure compliance with all your federal awards. Not something that you need to be very concerned about, but just some background information on how we do decide which programs that we're going to be required to audit. We perform a risk assessment, so similar to our audit of the financial statements, we start identifying risks associated with your programs. First thing we do is we take your Sefa. That's the very first thing that we're going to ask you for, and we'll start to divide the programs based on their size. So programs over a certain dollar threshold will be identified as type A, and anything under that threshold is identified as type B. That threshold moves based on your total dollar value of your federal award, so it's not a set dollar amount. And then from there, we start to look at risk factors, and we identify programs that are high risk and programs that are low risk. These risk factors, some of them are set out by the federal government and they're yes or no questions, but many of them are subject to auditor's judgment. And we look at things like the complexity of the program, recent turnover in personnel associated with the program, or even instances of non-compliance that have been identified by maybe a granting agency or a regulator that came in. So even a program that is small dollar amount, we could still select it for audit if we determine that there are some factors there that make it higher risk. So just another example of why you should really be implementing these compliance best practices across the board. And the best way to ensure that you're going to be in compliance with those program requirements is developing good internal controls. And the federal regulations require that the non-federal entity establish and maintain effective internal control over federal award compliance. And it's something that we're required to audit every single year as part of the single audit. These controls, some of them may be the controls that your entity already has over financial reporting, but you're going to need additional areas of coverage as it relates to compliance. So you may need to develop a control of some sort of review process over an eligibility determination. You'll definitely need to develop some reconciliation and review controls over the preparation of your Sefa to make sure it's accurate and it's complete and it articulates to your general ledger or other supporting documentation. So your financial controls are a good starting point, but you really need to build them out to make sure that you're addressing areas of compliance that are applicable to your federal awards. Some areas identified specifically by the Uniform Guidance, you need to have controls or some sort of procedure in place to take prompt action to remediate any non-compliance identified. And also that you have safeguards in place to protect any personally identifiable information or other sensitive data that you have in the process of administering your award. So if you have, great example that I deal with a lot is for student financial aid. There's a lot of student data in there that's very sensitive that if leaked or hacked could cause a lot of harm. So you need to have a good controls, good strong IT controls in place to protect that data. The feds give guidance on how you should model these controls or what type of framework you should be looking at when you're developing these controls. The first example they give is the standards for internal controls in the federal government. It's what we call the Green Book. This is what the federal agencies use within their own organizations to develop controls. So these are the controls that they follow. One that I recommend and recommended by the feds as well that you've probably heard of is the COSO internal control framework. It's generally considered to be one of the gold standards, if you will, of internal control frameworks. One other area that is mentioned is if you look at that compliance supplement that we talked about, part of that is a discussion on internal controls, but it really mirrors that COSO framework. So you can look through that, but I would recommend probably going directly to the COSO framework, and there's a link down for that below as well. If you haven't read that before, I would recommend it not only for your federal audit, but for your financial reporting controls as well. It's really comprehensive guide on areas to ensure that you're maintaining that compliance, your reporting is accurate, and that you have a really good, strong system in place. And should, in this sense, is indicating a best practice. So it's not presumptively a mandatory requirement. However, when your auditors come in, and what we're going to recommend is that you're following those best practices. So we're going to be looking for a control structure that's in compliance with COSO, in compliance with the Green Book. And if it is some other type of standard, it really should be even a higher level of standard than these two that we've talked about. A big piece of your internal control system is going to be developing policies and procedures. And any significant policies and procedures that your organization has, the best practice is that they are in a written format. And this does a couple things. The first thing is, as these policies, procedures, practices are communicated amongst your staff, when they're communicated orally, they could potentially be changed or deviate from the intended process. When they're written, people can reference them as needed. They can be provided to newer staff and communicated across your entity in a consistent manner. And then the second thing is that when you have a key employee leave your organization, they don't take all that information with them. It stays within the organization because it's been put into writing and distributed to your employees. The Uniform Guidance actually specifically requires a couple of different policies and procedures to be in written form. So we've listed them here for you. The first one being procurement. So again, purchasing and contracting with vendors. And this policy does need to include an element associated with conflict of interest as it relates to purchasing. Kurt's going to go over that one in a little more detail later. Written policies over cash management. And cash management in terms of a federal standpoint it's not referring to necessarily, cash flow or like a treasury management function. It's referring to how you get your award monies from the federal government. So whether you're drawing them down directly from a federal agency, or maybe you're submitting a reimbursement claim to be reimbursed for costs that you've incurred, you got to have your policies and practices related to this in a written format. And then the last one is allowability of costs. So that ties back to that subpart E, those cost principles that we talked about. You need to have your organization's interpretation and policies, practices, procedures related to that area in a written format. And it must include items related to travel and personnel costs. So you may be able to start with some existing policies or procedures that your organization has. For example, travel is a good one. You may already have a travel policy, and you can certainly use that for your federal policy as long as it's stringent enough to address the federal compliance risks that exist. So you may need to tweak it a little bit, but that's a good starting point. Any other major compliance requirements with your programs, for example, maybe an eligibility determination, it's really best practices to have those in writing as well. So even though those ones that I talked about are specifically required, we would recommend that any major area of compliance that you do have some sort of written policy procedure or maybe a handbook or manual associated with that, just to ensure, again, that your employees can refer to it when needed and that it's consistently communicated. And one thing, don't forget to periodically review these policies and procedures to make sure they're still effective, that they're updated for the most current guidance that's out there for your programs, and that those policies and procedures are still doing what you intended them to do when you wrote them. I'm going to turn it over to Kirk, who's going to go into more detail on those procurement policies that we talked about.
All right, thank you so much, Alicia. Now, one common area of concern, especially under CARES Act, is there's the potential for-profit entities to be included in a single audit, where that guidance is still being issued. We're still waiting on federal, like a final rule from the federal government on that. As it stands now, for example, the provider relief funds are currently standing with them being subject to audit, but no final ruling has been issued yet. And again, many smaller entities are now receiving coronavirus relief funding from either their state or county or many other sources. And one of the common questions we get is, what do we need to have in writing? What do we need to have prepared for the auditor to not get in trouble, basically? I mean, that's what everybody's worried about, right? Is getting in trouble with the auditors or with the federal government or the state. And one of the required policies, and probably this one and subrecipient monitoring being the two hardest areas for especially entities new to single audit, is procurement. So procurement is the purchase of goods and services from vendors. So this really is a vendor purchasing policy. It's not meant to be internal, like cost allocation and that type of stuff. It's a vendor procurement policy for goods and services. It does need to be written, and the policy needs to be compliant. And you may say, well, that makes sense. Of course, the policy has to be compliant. Well, where the complexity comes in is that it has to be compliant with local code, state law, and federal law. Now, if you're a for-profit entity, the local and state law is probably not going to have any impact on you. It's really the federal law stuff that you have to worry about. If you're a nonprofit, again, generally probably just the federal law. But if you're a rural city or a rural county or local government, you likely have state statutes that you have to follow. You might have local municipality codes that you have to follow, and federal law. And so for those entities that kind of get hit with all three, you have to make sure your policy complies with all three. And so what happens when, let's say, state law and federal law diverge and they're not consistent with each other, then the entity has to pick the most restrictive of those two instances. As an example, just a basic example, let's say state law requires bidding, competitive bidding, at $100,000. So if you are entering into a contract that you think will potentially be $100,000 or more, you need to have open competitive bidding processes. Well, the federal law, depending on whether you have implemented certain provisions or not, is either 150,000 or 250,000. So in this case, the state law is 100,000, so you would have to comply with that $100,000 requirement, and the 150 or the 250 at the federal level doesn't even matter because you're bound by that $100,000 requirement. Same goes down for quotes, and when quotes kick in, I know here in Nevada, where I'm at by state law, local governments have to receive quotes above 25,000. Well, federal law is at 10,000. So there's a divergence in state and federal law where the federal is more restrictive and entities need to be receiving quotes at purchases above $10,000. It is best practice in this procurement policy. Normally what I see, and it's not that it's wrong, but normally what I see is a copy and paste of the federal regulations, which I provided them to you right there, 2.317 through 326. Again, that's in 2 CFR Part 200, where uniform guidance is at. And normally a lot of entities basically print those out or copy paste them, put them in their Word document and say, these are our purchasing policies. And really, those federal regulations are meant to be tailored to be, just while still being compliant, but tailored to your organization. So it should have workflow and internal controls in there. For example, who can approve sole source contracts? Who can approve when it's a non-competitive bid? Who is needed to initiate or authorize transactions above 10,000 or above 25,000 or 50, whatever those numbers are for your organization? Who is responsible for all of that? And the reason is because when we come in as auditors, that's what we're looking at, is your purchasing policy compliant and did you follow it? So that is what we're going to be looking at. And if you don't have internal controls documented in there, going back to Alicia's earlier slides where she's talking about internal controls, it gets a little dicey and difficult for the auditor to look at it to see if you have appropriate internal controls or not, if it's just all verbal or not written down. Key with procurement, and especially in the audit setting, is document retention. Quotes can be informal in nature. So when I'm talking, quotes are different than competitive bidding, right? So competitive bidding is a formal process where firms are submitting either proposals for services, or contractors are submitting sealed bids for construction. That's a formal process. Quotes is an informal process where maybe you're downloading quotes from the internet, or you had a telephone call with a potential provider, or some sort of email correspondence. All of that needs to be documented because you have to be able to prove that you obtained an adequate number of quotes. I get this question all the time: what is adequate? Uniform guidance doesn't actually define adequate other than more than one, but there are some federal agencies who have adopted uniform guidance. Well, all federal agencies have adopted uniform guidance, but they've put their own uniqueness on it a little bit. And some federal agencies have actually explicitly stated 3 quotes. So as a general rule of thumb, 3 quotes would be what's recommended when quotes are required. So again, document retention is key when it comes to procurement. If you don't have a procurement policy and you're getting funds from the state, as we speak for CARES Act, or you're getting provider relief funds and you don't have a federal procurement policy, please, I implore you to start working on that immediately to get that implemented, because we're going to have to look at expenditures under federal awards and make sure that they were procured following federal regulations. So to sum up what Alicia said and what I just mentioned on procurement, is ultimately the auditee is responsible for maintaining appropriate systems. So appropriate systems include record retention, storage, access to books and records, proper safeguards to protect the information. You have to have an appropriate chart of accounts. So this is going to be hard, right? For for-profit entities who have never organized a chart of accounts to identify, different GL codes for different grant programs, you're going to need to build something in or have some sort of subsidiary record that ties back to the GL so that you can track the grant revenues and the grant expenses by grant. You can't pool it all together. You need to be able to separately identify each federal award, the expenses that are being claimed under those federal awards. So everything that we've talked about here between internal controls and all of that is essentially sound financial management of the award and sound internal controls. And again, this is a requirement under uniform guidance. You can see the codification there at the top of the slide. So please keep that in mind. And again, if you have questions, don't hesitate to reach out to the Eide Bailey professionals. A little bit on record retention and reconciliations before we get to COVID and then our wrap up and closing. There are challenges in a paperless environment, and even more so now with the remote workforce that everybody has been, sort of forced upon recently. Whether or not the records are in hard copy or in paperless, record retention is still required. Uniform guidance generally, I'm saying generally, defines record retention as 3 years. There are some specific caveats where it's more than 3 years, but in general, records need to be maintained for at least 3 years. All your reconciliations or items that support internal controls or things that can be simple like segregation of duties for review and approval of invoices. Maybe that used to be done where somebody would just sign off or initial an invoice or stamp it. And now in a paperless environment or a remote workforce, that's not as feasible, or it's just not happening. So in those cases, what compensating controls, what workflow can still be documented and evidenced to show that internal controls were in place. Again, all of this needs to be maintained. And so if you haven't developed those policies or thought about that now, if you've already been spending amounts under the past 3 months, you're probably out of luck for that. But at least, coming up on July 1st, you guys can be good starting the new year and trying to get these implemented ASAP. Okay, quickly, we're going to talk very briefly about COVID-19 and just kind of the overall environment that we're in. In general, guidance is coming out on an almost weekly basis, sometimes daily for some programs. We're doing our best to monitor that guidance and to provide it to clients as we get it. But in general, there's a lot of confusion on what will be subject to audit, what won't be subject to audit, what requirements we have to look at if it's subject to audit. All of this is in flux, and we're likely not going to have final answers on this until September or October, when that compliance supplement comes out and as we receive more information and more guidance from the feds. So really, we're kind of in the planning stage, but audits are starting soon, and it's fast and furious. I just, please have patience, and we're trying to provide the information as soon as possible. If you're confused or not sure whether the program is subject to a single audit, please reach out and we can give you kind of our best answer as we know now, but realize that it's subject to change. The big one that you may have heard about is double dipping of costs. A lot of entities received the PPP loans, so the Payroll Protection Program, and other CARES Act and grant funds. It is imperative that you're tracking what payroll costs were applied to PPP versus what is applied to other federal grants, because you can't fund or reimburse the same cost twice. So if I'm paying for payroll period 26 against PPP, I can't charge any payroll costs from payroll period 26 to other grants, because then I'd be double dipping. That's just kind of a basic example. Procurement, we are in a state of emergency for many entities. So in states of emergency, entities are supposed to default to their emergency procurement policies. Unfortunately, many entities don't have that, and that they might not even have a normal procurement policy. And so generally, in the rule of thumb is if there's public health or public emergency at risk, then you don't have to go out to bid if public health is at risk. But if it's for stuff like buying office supplies where there's no public health, that should follow normal procurement policies. Again, big picture here, appropriate stewardship is what's key. There are a lot of eyes on the CARES Act dollars. There's a lot of public pressure. There's a lot of anxiety in the current environment. And really, if we just all take a step back and think about what's the overall goal with managing these grant funds, one is to perform public good and help the public and help organizations that are struggling. But the other thing from the management side is to ensure appropriate stewardship over these grant funds, because we don't want to hear down the road 5 or 6 years that there's a lot of fraud, waste, and abuse. We want good controls and good stewardship. So with that, I'm going to turn it over to Angie to have some closing remarks, and we'll go from there.
All right. Thank you, Kurt and Alicia, for walking us through the single audit process. Really, like Kurt just said, everything is changing very quickly when it comes to CARES Act funding. One day we think we have everything sort of figured out and we know what the path is going to be, and then the next day the Office of Management and Budget or the SBA or any other agency comes out with some different guidance. So we are getting information out to you as quickly as we have it available to us. So really want to encourage you that if you do have questions, reach out to your Eide Bailly representative. We are here to help you navigate through this process. And as we know of changing things, we will make sure that we get that information to you. You can certainly also ask questions to your grantors and your own auditors if you're not an Eide Bailly client. The grantors have been very willing to answer questions and talk through things with us to the best of their ability, but in a lot of cases, they're in the same spot we are. Everything is changing so quickly, so it's really anybody's best guess sometimes. I want to say that the last few slides in the presentation provide a lot of resource materials. So we've referenced many things today: uniform guidance, compliance supplement. We talked about CFDAs. So there's resource materials in the back of the slides that will help you with links to those topics that we discussed today. If there's any questions that you have as you're looking at those or looking for information that we talked about today, please reach out to any of us and we're happy to help you. So I want to again thank Alicia and Kurt for walking us through that beginning look at the single audit, and hope you all have a great day.
Thank you everyone so much.
All right, everyone. Thank you so much for attending, and you guys have a great day.